our group is about, okay, 33 members and we have 24. Okay, the first thing, the Kingmaster webinar English version, we will learn in, the first thing is SNR, support and resistance. Okay, support and resistance. After that, we will learn about, this is all the basic thing, but it's very, very important. You will learn about SND, supply and demand, because I expect that you guys are really already very, very good in Forex. So there's no need to go very, very deep on the support and resistance basic or whatever it is. Is that correct? You are already master, right? Oh, Zan from Dubai. Don Wachitra from Australia. Thank you very much. So we go with SNR support resistance very, very fast lah. Huh? So let's suppose we have a price moving down and going up there, and then we have a very simple. This is support. Later I'll show you in the chart lah. We have support here, because the most important thing is not only support, it's not only resistance, but the most important thing is significant support or significant resistance. Let's suppose price going up and going down, it makes a resistance. So you will see a lot of support and resistance in your chart, right? So, but the most important thing in the chart, what we are looking for is significant support. What is significant support? Significant support is a support which is quite significant in the chart itself. Okay, the word significant support is very, very important. We have a lot of support, a lot of resistance, but what we are looking is a significant support. So significant support, usually we have like two support in line. In Bahasa Malaysia we call it sama baris. Do you understand the word sama baris? In line, it is actually at the same line, something like this. Let's suppose you have support here and price going down again and you push up again. So we have S1 and S2. I write it down here. I think like I'm very, very fast here with you guys because not so many, not maybe many people here. So don't see like we have a problem, right? S1 is equal S2. The level itself. The level itself is S1, S2. Yes, I verified the Google for the word from your YouTube video. Yes, sama baris mean in line, in the same line. So S1 is equal S2. So this is what you call significant support. Always looking for this. Always looking for this, because we are looking for a place where significant support that being broken by supply zone or by kings. Later we will learn. So let's suppose you have one resistance here and price going up, and again it going up again at the same place at the same line. It makes an R2. Let's suppose we call it R2 lah. This time we put R2 and this one is R1. So this is what we call significant resistance. Right. So far follow. You guys have any problem with significant support, significant resistance? This is very, very important. Usually I only focus, I'm looking for this kind of significant support, significant resistance in the chart itself. Let's suppose I open the a chart here. We go for, this is my M trading account. Okay, so if I do a marking here, let's suppose I just open a horizontal line. What I'm looking for is a place where we can find two support in line, something like this. Do you see that? Or is it too small? So I just mark this with arrow. You have support 1 and you have support 2. So this is significant support. Okay. Do you guys see that? So let me make it bigger for you. So far so good? Yes, okay, good. Now, the same thing with resistance. If we go to resistance, What you are looking for is something like this. A lot of resistance which is exactly inline, exactly sama baris. Bahasa Malaysia we call it sama baris. So this is your R1, and then we have R2, and then we have R3, R3, and then we have R4, right? So this is totally a significant resistance. Significant resistance. Just by the naming itself, you can see it is a very significant, a very, should I say, a very significant resistance compared to other resistance, because we have a lot of resistance. We have resistance here, we have resistance here, we have resistance here, but since this resistance doesn't have that two resistance in same line, so we don't call it significant resistance. But in here, you can go back over here. We have a significant support over here, something like around here, around this place. So this place is significant support. We have a lot of significant. It is minimum support is like minimum you need to support, which is inline, so that it can be like it can be, or it can be called as a significant support. The more, I mean, the more the support, the better it is. So far, so good. Black line is also significant resistance. Black line, do you see a black line? Oh, should we start with H4 or any time frame? So actually, we will start in any time frame, but it is preferably to go with a bigger time frame first. Bigger time frame first. Let's suppose that usually I trade in M15 or M30, but the bigger time frame is H4. For gold is very fast. I think they have a very fast movement, so H4 is quite big enough. But for currency, maybe you need like daily, or maybe you need weekly, or whatever it is. So, but as long as you can identify significant support, significant resistance, this is good enough. For example, like this, because in time frame, I mean in the chart itself, let's suppose I do this marking. This is your significant support, right? We have S1, S2, and S3. So this is your significant support. And then if you change the time frame, it is still the same place over here. It doesn't change. The significant support doesn't changes place. So let's suppose this is I change to H1. You still see the support over here. S1, S2, S3 have changed to M30, still the same place over here. If I go to M15, it is still at the same place. So time frame is not an issue over here. If we use indicator, there may be some issue with the time frame. But when you use support and resistance, the time frame doesn't bother at all, because any time frame you see, even the smaller time frame itself, you can see the same support and resistance. All right. Okay. Now let's say that you want to do the, I mean, the marking. Is it will we put at the shadow or the body? We preferably put at the shadow. At the shadow. We mark the line at the shadow, not the body. The body is for supply and demand. But for SNR, you must use the shadow. Okay, do you get that? Understand? Do you guys understand the word come from my mouth? Yes, good. So the shadow, if support SNR, use support with shadow. Yes, use wick. Shadow as also we call it wick. Wick. WICKS. So for supply animal, later we will use body, the body itself. Okay, or we call it the zone. All right. Now, so far so good, significant support and significant resistance. So I go back to the pin itself. We go back to the pin. Right. Now, how about if we have like two resistance, then suddenly let me make it another place over here. Okay. Let's suppose we have a lot of support and resistance at the same place. The first time, if I draw something like this, we have like a very significant resistance. So I call this like R1. We have R1, and then we have R2. So we have two resistance in line. So this line is significant resistance. Then suddenly price breaks up, and then let's suppose go like this, and then going up, and suddenly it's going down again, going up and going down again, and going up. Okay, so it is now another significant support. Is it correct? We have significant resistance, we have significant support. So this line we call it SSR, which means significant support and resistance. Do you get it? Do you understand SSR? This you have to use. We will use this term very often. SSR, 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 SSR. A place where there is a line where all the resistance and the support meet, because you have a significant support over here, and then at the same line you have significant resistance over there. So SSR is very important, right? So what is it about significant support or significant resistance or SSR? And then what else? This is quite basic lah. You must understand this thing, because this is what we are looking for in the chart. We don't look so many support. We will find so many support. Let me open the chart itself. If we look for a lot of support and resistance, you will make our feel like confused, right? Confused. So you cannot find how to trade, where to trade. There's a lot of support and resistance here. But we are looking, when we go to the chart, go to any time frame, what we are looking for, the first thing is the significant support or significant resistance that is being broken. This being broken. Okay, one question from Srikant Biswal. Should they be near to each other or can be in a line at a distance? Usually they will be near each other. For example, like this, we have a very near one. 1, 2, 3. They are really near to each other. What does it tell is that the price try to break this demand zone, which is I will teach you later, but it fails many times. It fails many times. They try one time, it tries second time, and then it tries another, the third time, still fail. But after that, they have a broken one over here, but still price going up. So actually what it tells us is that this line is very important. This line is very it's very important. So this is where we want to find a place where we want to do our entry. Or should we call, how do you call over there? You call enter or entry or what? The same. So entry. So and then suddenly over here we have what? Something like we have a base over here, price drop. You know, usually when price try to break some demand zone or whatever, or in the advance we call it a price cap. Later we will learn this. Usually it will try 4 times. I mean 1 time, 2 time, 3 time, 4 time, and then the 5th time usually it cannot hold anymore. It will break. It will break going down, and then it will come back, retest to the same level, and there you can entry 1 time over here. You can entry sell here. Okay, when price going down and engulf. You know what they mean by engulf? Engulf mean it go below this lower low. Okay, it go below this lower low and going up. How many times it will come to the zone and react? So usually if the price react 1 time, 2 time, but I cannot guarantee you it must be 2 times or 3 times. But usually, if the price come back again over here like that, this Euro JPY, the second time it comes, you can still entry with a stop loss over here. Okay, but the best, I mean, the best one is something like this. Is the first time it breaks your significant support, this is the best place you want to enter sell, because the I mean, the momentum is there. The intention of the big trader is to break the significant support, so it just continue. But the second time you want to enter again over here, or you want to entry over here, sell again, you need to find, or you need to look for a price action, which is we will learn later. We will learn later about price action zone, which consists or maybe a fake out, or maybe a side flip, or maybe a diamond, or maybe, I think some of you already know about it. But remember, when the price comes again the second time, or I mean after they break, usually you need to find or wait for price action. Wait for a clear price action, like the price want to go down. If you don't have the price action, usually I don't entry at the second time. It's quite dangerous. It's quite dangerous. If let's say price going up very fast, so no, it's quite dangerous unless it has a clear price action. Like example, like over here, we have a fake out R1, R2, R3, something like that, which is it, and then you have SR flip over here, which is we will learn later lah. So for at least what I want to tell you is that we are looking a place where significant support. This is for example of sell only. Yeah. For buy, you can look for significant resistance which is being broken. For example, we have gold like this. We have gold over here. We have significant resistance over here. Price break up. Do you see that? Price break up. We have a significant resistance. 1, 2. We have SSR over here. Resistance. We have resistance over here. Resistance, and then we have support. So this line itself is a SSR. Am I correct? This is SSR. Then what happened is the price break up the level, the line, and then it goes back again. There you can do some buy entry, buy position over here. Okay. So you want to buy, if you want to buy over here, what you want to do is you need to find a demand zone, which is we will learn later. Wait a minute. The chart is still. Yes, you have a demand zone over here on M5. This is your demand zone. It has to be in line with the SSR, okay, which is, I call it key level. Okay, do you get it? Do you understand? Okay, good. Okay, now we go back to the pin. We have learned about SSR, significant support and significant resistance. Now we will learn a little bit about supply and demand. Is that okay? Supply and demand, because we need to find a place where, like, for example, something break this significant support. There must be a supply zone over here. This is your supply zone, so we need to learn about supply and demand. Okay, so far so good. This is good, very fast, because not many people here So you have any question, just ask. Don't worry. This is quite basic lah. I think you don't have a big problem about support and resistance. Okay, now we go for demand. Let's suppose price going up. In demand, in supply and demand, we have three, what we call it. This is really, if price going up, it is called rally. If price going down, it's called drop. Okay, if price going down, is drop. If price going sideways, it is called base. This is basic of supply and demand, and this is called base. Usually the base itself is in the box. I mean, we usually use the box as the base. Base. And then we have like, how about the support and resistance for the incline line? Okay, for support and resistance with the incline line, we will learn in the advanced mode. Advanced mode, we have like QMTR or SSR, okay, which is quite advanced. But we learn only with the inline only at this moment to make it easier. You need to understand the supply and demand first. Okay, now we have the rally, a drop and base for supply and demand. Let's suppose we have the price rally, and then you make a base or sideways, a small base, and then price going down. So this place is, we call a rally base drop. This is rally base drop because we have rally over here, and then price is base over here, and we have drop over here. So the zone above there, on top of this thing, is we call drop base rally. Sorry, a rally base drop, or supply zone. Okay, so far follow. A rally base drop, supply zone. Another one we have is a drop base drop. A drop, price going down, we have drop here, and then price base, make a base, and then it drops again. It drops again. So this is what we call drop base drop, also a supply zone. Okay, still okay, guys? Do you understand? It's quite easy, right? So this is all the basic lah, but we have to go through the basic. If you are, this is easy peasy. This is easy peasy. So demand zone, you have a drop base rally, and then drop base rally. So you can see a lot of, let me show you in the chart, a lot of zone, but which one is a good one? Which one is the best one? The best one, how to do the entry. All right, we have this one is a drop base rally, and then we have, this is rally base rally. So this thing, usually if you change to the chart itself, it will, let me open the chart. If we open any chart over here, any chart or any pair, let's suppose H4 lah. Let's suppose, let me, okay, a drop base rally or rally base rally, a drop base drop, you can find at the top or at the bottom of the movement. For example, you have resistance over here, right? This is your resistance, and then this is your resistance, this is your resistance, this is your resistance. This is usually a rally base drop. Just mark the shadow or depend on the from the body to the shadow itself. This is a rally base drop. Why? Because price going up. This is price going up, and then it's going down, it's going up again, rally, and then you make a base over here, and it drops. So this is a rally base drop. This is also a rally base drop. A rally make a base and then drop. This is a rally base drop. If you want to look for drop base rally, you can find over here. Price going down over here. Just mark the from the shadow to the body itself. The last body. Do you know how to do this? Use the body. Sometimes I use shadow, sometimes I use the body. It depends. It can be week to week. Depend, because like this GBP New Zealand, it is H4. It is week to week is enough. Week to week is enough. If you go to a smaller time frame, you can see it is actually the body itself. You can, okay, this is from the body. Oh, it's okay, because it's just we want to mark the zone. When we want to do the entry, we will do the sharpening thing. Then only we can zoom in, zoom out in the zone itself. Okay, so far follow. This is a drop base really. So in supply and demand concept, what we do is very simple. If there are many base candle, if there are many base candle, what do you mean by that? For example, like this. Let's suppose we have a lot of base candle over here. We have like one, okay, let's say we have 1, 2, 3, 4, 5, 6, 7. It's more than 10. It's more than 10 candle, but the price, you can see clearly it is drop, and then it is make a sideway and another drop. So what we need to do is we need to find a place where the last part of the body that being broken. Let's suppose I put over here. This is the blue color. This is the blue one, and the red one. Just mark this candle and up to the shadow. Up. This is your supply zone. It's a drop base drop. Use this as a drop base drop. Okay. Shegu, is there any way to know when the price will respect the demand and supply zone, or will it break them? Later we will learn a very, very important, a very, very important supply and demand zone which will be respected. But at this moment, we just learn basic first, because I think it's quite simple. We just need to understand the basic concept of supply and demand. But then I'll teach you the king. What is the king? A fresh one. Okay, what does it mean by fresh one? Is like we have a drop, base drop here. Let price drop and then base and then drop. So this is the drop, base drop. You marking this as the zone itself, and the price try to go inside the zone, but it doesn't reach. Is it correct? So this zone is still fresh. It hasn't been touched by any price. The price going up again. Now it entered the zone. So it is entering a fresh supply zone. A fresh supply zone is very good to do entry. But let's suppose it goes again the second time, it is not fresh anymore. It's being touched. The zone is being touched over here by the price itself. So you need to find, if you want to do entry also at the second time or the third time, you need to wait for price action. Always remember that. You need to wait for price action. Okay, so far follow. Like this, we have a supply zone. Sometimes the supply zone, you just need to do with 2 candle only, like this. You have a red, and then you have a blue, and you have a red. So this is also a drop base drop. Because if you change it to smaller time frame, this drop base drop, even though it is only 3 candle, but if you go to a smaller time frame, you will see a base over here. Price going sideways, going sideways over here, sideways, 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 and suddenly it breaks down. Yes, basically it is a pause in rally or a pause in drop. Drop base drop is a pause in. That's why it's called. It is called a speed bump. You know speed bump. You have a speed bump. Price going down, and then it stop first, and then it goes down. So this is a drop base drop. At the top usually is a rally base drop. In the middle is a drop base drop. In the middle is rally base rally. Yes, a speed breaker. Speed breaker. I don't know. Is it speed breaker? It's a speed bump. Is to make the price slower, slower. Price, let's say price is moving fast over here. Suddenly it gets a speed bump, so it gets slower, and then there you go. It goes again. Okay. Yes, it's a speed breaker. So there are so many supply zone, there are so many demand zone, but always follow the rules. The rules of supply in demand is sell at supply zone and buy at demand zone. Only follow this simple rule. Sell at supply zone, buy at demand zone. And then look to the left. Look to the left. What does it mean by look to the left? For example, like this, price is going up, going up, going up. What you need to do is always look to the left over here. What do we have in the chart itself? What do we find over here? If let's suppose I do something like this, in the live market, let's suppose price is going up like this. It's going up, going up, going up, going up. So we are looking for opportunity to sell. If we find a drop base drop or a supply zone, I mean sell at supply zone. When price going inside the supply zone, it is time to sell. Okay, it is time to sell. Do not buy because you are at the supply zone. And then put your stop loss at the top of the supply zone. Maybe 20 pips, maybe 30 pips, or like this is very, very big. This is GBP New Zealand H4. Okay. Okay, so far so good. So price going up, your stop loss is over here. That is basically, I mean, the basic concept of supply and demand trading. And then if price going down, what you need to do is make your stop loss smaller so that you can make your risk smaller. And then your target TP is at demand zone. This is your drop base rally drop. We have a base and we have a demand zone. See, so this is a drop base rally. Drop base rally. So that is your target. Because at the demand zone usually is a buy call. This is your target. Because we need to buy at the demand zone. But if you look over here, how many times the price has been touched? Like you have a demand zone 1 time, 2 time, 3 time, 4. This is the 4th time. So the 5th time usually price will break. So it's up to you. I mean, this is quite good. For example, like this, you have the risk of 70 pip and the target is 335 pip, which is how many RR over there. Okay, so far so good. Sir, you were talking about engulfing and we deviated to other topic. No, we are still in the supply and demand topic, still in the basic. I see many demands on there. How do you filter the best one? Okay, good. Now, if you open the chart itself, we will see a lot of demand zone, a lot of supply zone, a lot of SSR, a lot of everything. So which zone that we want to do the entry? Okay, so let me go back to the pin. Okay, now we already cover support and resistance. We already identify supply and demand. Let me, what we are looking to do the entry or to do the execution is a key level. We always looking for a key level. What is key level? Key level is SSR plus SND. For example, you have a significant support being broken by a supply zone, which is in line. We have significant support over here. So this is your significant support. And then at the end of the significant support, or at the rightmost corner, we have a drop base drop. A drop base drop. Drop base drop or supply zone. Okay. So when the price breaks it, you know already that this supply zone is very important. Very important. Because why? Because it managed to break the significant support. Do you understand? Price tried to break something over here. It doesn't work one time, second time, third time, but the fourth time it breaks. So this drop base drop is a decision point which break the significant support. So this zone that we are looking for in the chart, not other zone, not this kind of zone, not any, this zone, we call it king. What is king? King is equal drop base drop that break support. Or a rally base rally that breaks significant resistance. So this is king. So this is not only a drop base drop, it upgrade itself as a king. Ah, very nice name, is it? Kings. Because he is the king. He is the king who break this significant support. So we are always looking for this place. Later when the price come again over here, there is opportunity for us to do the entry. Okay, this is all the concept, the key level. So you guys understand the king. Now you see the king. We learn about king. This is very important. The basic king is equal a drop base drop that breaks significant support or a rally base rally breaks. Is it? Yes. Or a rally base rally that break significant resistance. This is king. Breaks significant resistance. So if I go back to the chart, you can see over here, we don't simply do the entry anywhere, anytime. We need to find a place which is very, very important. Key level and king are not the same. Okay. The key level is the SNR plus the supply and demand zone. But the king itself is the zone over here. For example, let me clear this template, SND masterclass. This is GBP New Zealand H4. We have a significant support over here, a lot of support, a lot of support. So do you guys agree that this is a significant support? But you got confused. So a lot of support over here, over here. We have which one is the significant one? Maybe this one, or maybe this one, or maybe this one, or maybe this one. But you agree that this is a significant support, isn't it? The most important thing to find your entry zone is, remember, we sell at supply zone. If you go to the right over here, we have a drop base drop, which is the supply zone. So this is your supply zone. Okay. So this one you delete because not important. This is not important. This is not important because you don't have the significant support, and then you don't have the supply zone over here. This one you can modify your horizontal line. You go very specifically over here, and then you can find a significant support over here, significant support over here, significant support over here, support over here, support over here, and then you find resistance here, and then you still again find another support over here, then you find another resistance over here. So this is your SSR. The first thing, it is SSR, significant support and resistance line, without the supply zone, without the supply zone. But once you combine with the supply zone, it is already a key level, because SSR plus SND is equal key level. This key level is the place where we want to look for our entry. So just mark your zone over here, price going down, and you have to wait. You have to wait and wait and wait and wait and wait and wait until price go inside the zone, and it is time for you to sell. Do you understand? Yes, this is like the most important. If you have a lot of support like this, maybe sometimes we can get confused, or maybe, oh my God, which one? We have a lot over here, a lot over here. We have also another here. This has also another supply zone over here. Oh my God, so many, right? So many. But at least from previously, we have so many over here. We can reduce all those line. You can reduce. We are looking for the most important one. How to find the most important one is you have to combine with the supply zone. If there is no supply zone over here, this is quite not a good place. Sometimes you don't see the supply zone in the same time frame. You will need to go down into smaller time frame to find the zone. This is king. This is king. Okay. For example, we have gold over here. We have resistance, we have support, we have a lot of resistance, and we have resistance. Some suddenly price break up very, very fast. Okay. And then you don't see the demand zone in the time frame itself. You don't see the time frame 15, you don't see the demand zone, you don't see M30, you don't see it, you cannot find it, but you need to find a smaller time frame. In the smaller time frame, finally you can see the demand zone is at M5 over here. This is your rally base rally. Then you have an entry over here. Do you understand this? Because in the chart itself, you cannot find a very inline one in a very significant line SSR with supply zone, which is very, very summer bias one. And it's not easy. The market will not give you like that. It will give you a lot of support, a lot of resistance to make you confused which one is important. So what you need to do is you need to practice a lot. You need to practice a lot to find which one is good. For example, for me, I already practiced 1,000 times. So I can see here you have a significant support, you have support over here, you have support over here. Suddenly you have a supply zone. Price going up and then going down. It's going up, it's going down, and then you have entry over here. And then price going break up again, come back, and it going up again. So it depends on the situation. Okay. There's one question. If we place the line just below, there is also a supply zone. Yes, there is also a supply zone. For example, like GBP New Zealand, there is also a supply zone over here, a really best drop. But later in advanced mode, we will at least we can filter some we can mark as SR flip or or, or fake out or whatever, which is we will learn later. So that we can identify which one is good. Or maybe you can entry over here. Let's suppose you have significant support and then you have supply zone over here. At least you got your entry over here. You got your entry here. Price already going down like 20, 128 pips. There is a thing, there is time for you to make your stop loss smaller, to reduce your risk, or you take or your profit partially. Yeah, partially. Later we learn about QMTR, which is very my favorite QMTR. So QMTR is like you have a lot of support, but they are not in line. They are inclined. Inclined is it? They are not in the same line. So we are looking for QMTR, which is, I mean, our great weapon to do the entry. QMTR, which is we will learn later. But for today, I think we will learn about SSR, SND, and KeyLevel. Is that okay? Let me check. Gold, EJ, AUD, USD, Euro, GPAU, Euro, USD. This is daily. Okay, we look for a live market over here. Sometimes you can do entry on this very small time frame, but this one quite advanced lah. QMTR is quite advanced. Okay, later we learn about QMTR. Yeah. So SSR King, SSR plus SND is equal King. No, the King is SND. SSR plus SND. Oh, sorry. SSR. Okay, I open my pin. SSR plus SND is equal KeyLevel. It's equal KeyLevel. This is just KeyLevel. But King is a supply zone, a drop-based drop that breaks significant support. There's a difference over there. Do you get it, Pawan Kumar? SSR is significant SR. Yes, significant SSR good. Significant support and resistance. Yes. SND is supply and demand. Yes. Yes. For entry, we have to look for the king. The king. SSR plus SND. You have SSR, significant support and resistance, or maybe you can find a significant support only. Supply mean drop based drop. Yes, it can be a rally based drop. It can be a drop based drop. But usually a king is a drop based drop. The king is a drop based drop because later in advanced mode we will learn price cap. Price cap is a rally based drop or drop based rally that hold price. Oh, it's getting confusing. I'm getting more confused about this. Okay. So what if there are many drop-based drop? If there are many drop-based drop, we don't choose any one of them unless they are in line with SSR. The word in line is very important. If there are a lot, you can see a lot of drop-based drop in the chart. But if there are no significant support behind the drop-based drop, which is in line with it, so we don't call it as a king. A king is a drop-based drop that breaks significant support, which is in line with it. Okay, it must be sama baris. In Malaysia, in sama baris, in line ataupun sama baris. So the rest, which is not sama baris or which is not in line, you can ignore. Ignore the zone, which is really not strong. Yes, king is a continuous pattern with key level. So far, so good. Because later we will learn about SSR king and then QMTR king. Oh my God, a lot of things. So I don't want to make you confused. Just understand today subject or today's syllabus, which is you just understand key level, you just understand SSR, you just understand SND, just understand it. Yes. Finally, he will know that king is king. Okay, Vikram, when price return to supply zone, which is in line with SSR, do you studying the current PA before entering? Because it could just break through that. Yes, of course. If the price going back to your drop-based drop or king zone, you have to look for a price action, which is we will learn later, so that you have a higher probability to win the trade. If you have fake out, you have, for example, let me open this chart. If price going straight away, I mean straight going up, so you don't do the entry. It's quite dangerous. You need to find a fake out, at least a 3 drive or let me SR flip, 3 drive, SR flip or compression. Like this is a compression, which is we will learn later. So you have a better chance of winning the trade compared to a price where it's going straight up like that. You need to understand this price action, which is we will learn later in the advanced mode. Yes, usually it works. I mean, the second time, the first time no problem. You can, yeah, you just entry because it is very fresh. But the second time, which is quite dangerous, you need to find or you need to identify price action like compression or CP or CPLQ or. So I don't want to make you confused today. So at least we just learn. Okay. The king is always in line with the SSR or can be lower or above SSR. It can be lower, it can be higher, but it can be in line. But we are looking for the first criteria is we are looking for the inline one. If it doesn't inline, usually it is at the at the upper of the SSR. We don't entry at the lower one. Let's suppose you have two supply zone over here. You have king over here. You have two kings over here. Usually don't enter or don't entry the lower one. It's a place for a fake out only. So please choose the upper one. Always, if you have to, choose the upper one. Always choose the upper one. Level over level. Okay. So far follow. I think we are quite good a lot today. So I'm afraid that you will get confused and because it's quite hard because you don't have indicators to show you where to sell, where to buy. Well, we are naked trader. A naked trader, you need to like practice a lot. You need to identify which is support, which is resistance, which one is important. A drop example of a drop base drop. Okay, this is we got another one over here. This is H4. If you can see over here, we have support and a lot of support. The first thing when you look at the market, always look for support, significant support. And then over here, if you go to smaller time frame, you can see a drop base drop. Something around here. Let me see on M15. Yeah, you can see a king over here, drop base drop. Small. A king. Later we will learn a king. King. So this is a drop. You see a drop and then a base and a drop. So this is the zone we are looking for entry. You look to the left, you have significant support over here, or you have QMTR over here. And then when price going back, retest the zone, it is time for us to sell. It's something like that. But this is only basic. This is only not explanation. This is only information. Because later on, in the advanced mode, we will learn SSR King and we will learn QMTR King, where you can pinpoint exactly where you want to the entry. Exactly. You need to find the left support, you need to find the lower low, and then you need to find the right support. Then don't worry, you will find it pinpoint accuracy. This is what I teach my student. All right. Do you agree with that? Do you have also a shareable document? I don't think we need all those document. No need. You just need understand. You just need to understand the SSR, the key level, the basic supply and demand. Then later, your understanding will grow, and then you can see in the market. Eh? So because the more you read, later on you will have a lot of confuse. Yes, you need to practice a lot.